Hello and welcome to Flagstaff TV. Today we are joined by Krzysztof Zielicki, who is the chairman of Angus Energy. Krzysztof, thank you very much for joining us today.
Thank you.
Angus Energy reported its interim results recently and an operations update. What were the key takeaways for investors?
I think there's a few, but they're quite straightforward. We have strong EBITDA. It's coming in at around 15 million pounds a year. We have strong production, which is sort of around 2 million scuffs a day. And we've got Brocken production coming up. So, and that's already is sort of around 50 barrels a day, and it's increasing, giving us an extra sort of million pounds of revenue, probably a little bit more. In essence, we've stabilized the company. It's a strong foundation, which both on the production side and on the finances.
The company is in a stronger position following the recent refinancing. What does that mean for Angus's strategy going forward?
It means, firstly, I mean, it was a very important point and a very important step for the company, because what actually happened, very, very few AIM-listed companies, I think I'm only aware of three very large, three companies only getting sort of high levels of refinancing in place. So we've really done extremely well refinancing. It basically means that we've, restructured the debt, so we don't have creditors knocking on our door, which is unfortunately, one of the problems for a lot of AIM-listed companies. And what's happened now is, due to the way the refinancing is restructured over 4 or 5 years, we basically are ready to expand and grow.
With the recent non-executive appointment, is your management team now in place? And can you tell me, what do they all bring to the team?
Yeah, the team is ready for growth. We have Richard Herbert, of course, is on the board. I mean, Richard has 40 years of experience. He was head of exploration for BP, and he has literally experiences all over the world. We've just brought on board Antoine from Conexon. Conexon is a huge shareholder and very, very committed to the growth of Angus. So by having him on board, we have a direct access to the huge resources of Conexon. We have a very experienced CFO on the board, and we have myself. I've been involved in probably around $200 billion worth of transactions around acquisitions over the last sort of 40 years. So we have a very, very experienced board. Add to that, we've also got Ross, who's now looking after our sort of subsurface. We have people like Tim, who is a very, very experienced operator of equipment. He ran all the sort of North Sea equipment. And we're talking about, experience of probably around 200-300 years in the oil industry. Very, very few companies have anything close to this kind of experience in terms of small companies, have anything like this sort of experience literally on their books. So this team has sorted things out in terms of production. It has sorted things out in terms of its financing, and now we're ready to grow.
What can investors in Angus look forward to in the near term?
I think the near term is extremely exciting. We have to look at two things: organic and inorganic. We're just doing a turnaround, which was scheduled, and we'll be back in production next week, and we'll see some increases in production as a result of that. We are looking at sort of our reserves, and we see an opportunity to actually increase our reserves. And we are looking at restarting an existing old well, which is not in production at the moment, which would increase our production quite dramatically. By the end of the year, we're going to have a booster compressor, which will basically, it's just one big pump. It'll just suck up even more gas. And we're looking at more production of crude. In essence, it's just we're looking at growing the existing production over the next sort of 6 months. So you'll see improvements as we move forward. On the other hand, we look at the inorganic, and we have 5 targets which we are actively involved in. I can't obviously give you more details around that, but they're a mixture of mergers where we're merging with another company. This is quite a big sort of a plus for both companies, because you're taking out a huge number of costs. You're actually increasing the quality of your staff. You're actually creating more liquidity in the market. So these are very, very positive moves, and we're examining some of them. At the same time, we're also looking at acquisitions. These are sort of acquisitions, both UK, North Africa, and the North America basins. And we're already sort of, again, looking in detail at how we could actually work those through financing, which would be available from Trafigura.
Do you think that Angus shares are undervalued right now?
I mean, of course they are. I mean, but every AIM-listed company will tell you that. But I think you need to look at the maths. And I'm a mathematician. I mean, sort of, I love maths, and I always have. And we're in a closed period now, so I actually can't buy shares. But I'm actively, the moment we come out of a closed period, I'm going to be actively buying shares. They are incredibly cheap. Number one, our market cap is running 1x EBITDA. If you look at comparisons to US, Europe, you're talking about 4x, 5x, even 6x EBITDA. That ratio, sort of is normal. To do it, just have 1x EBITDA is incredibly low. I mean, very few industries could, even sort of consider something like that. We have reserves, and if you look at the forward prices today of those reserves, you're talking about 200 or 300 million pounds worth of gas in the ground. Now, we need to get it out faster. We need to work, we need to suck it out. Otherwise, we'll be producing it for the next 40 years. And, I think, we'll see what happens in the future, but we need to take that gas out faster, and we're doing everything in our power. We're given no credit at all for storage. We could store CO2 in the reservoir. The government now is very, very keen on looking at CO2 projects. We can store gas in the reservoir. There's a whole series of things we can do, and we're given absolutely no value for that at all. So, and above all, we have a foundation. We have a very, very good team, which I've described, which will actually be able to do a lot more. We are basically, we're running in second gear. We have, maybe it's not a Ferrari, but we have, sort of a very, very nice Mercedes, and we're running it in second gear. We can actually really, really ramp up the expertise. Using the expertise we have, we can ramp up, and we can actually really grow into the future.
Chris, finally for today, what can shareholders expect in the future?
The shareholders must expect growth. Growth is the answer to basically everything that we have to do. We have to grow production at Salt Fleepy. The reserves, as I said, will last another 40 years if we carry on the way we're going. But we will need to do that much faster. So I've already described the various steps we're taking right now with the booster compressor, with reactivating an old well, but we'll be drilling more wells. We will be looking at some of the reservoir sort of calculations and modeling to basically see exactly how and we're going to extract more gas from the reservoir. We will be developing our oil business in the south of England by looking at some more fields, which we already own, but we're running through some of the permitting. We will develop our storage. As I mentioned already, CO2 is a very, very big issue, and we see ourselves as potentially a company which will be a very, very big player in onshore CO2 storage. This has obviously is at the very, very green end of the spectrum, but the government is taking this very seriously with this fund. And what we're going to also do is we're going to start looking at more mergers, more acquisitions. At the moment, the market is really crying out for a consolidation. The market requires more of the AIM-listed companies to actually come together, reducing costs, reducing complexity, improving management skills. So we are going to be looking at mergers with other companies, and we'll be looking at very, very specific acquisitions. We already are. We can basically examine possibilities in North America, in North Africa, and in the UK. This is quite important. There are some very, very good opportunities for us to actually expand our operations and at the same time de-risk, potential sort of political risk as much as physical risk. So the answer is what people should expect from us is growth in production, growth in reserves, reduction of risks, reduction in overall costs, and above all, growth in the share price, and a dividend being paid out as we grow. The dividend will be available, and that's what the share price is all about.
Chris, thank you very much for your time today.
It was a pleasure. Thank you.
And thank you for watching Flagstaff TV.